Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the top small caps that were in play today. First up we're going to look at EARS. Okay, so that closed up 36% today. That was a really sweet move. You have RSI now at 78, so it is at really frothy levels. So you got to keep that in mind. Fasto was above 80 and then it pulled back on that upper wick on today's candle. You've got the crossover here on plus DI on ADX. At 55, it's hitting very lofty levels, so keep that in mind. If you look back here, it did top out. Let's see right here. You can see, at about 49 back here on the run back in May. So keep that in mind. It's pushing really hard on plus DI. So right now it's on a 4-day run. And it came up and filled this gap. There's a gap over here in July between low of day on this candle and high of day on this candle. You can see the candle busted through the top of the gap. That's this red line here. And it also broke through the 100-day simple moving average at 58. So the key now is to stay above both those levels. If it can stay above 58, then it can push higher. If it were to drop below 58, that would signal consolidation. That's the must-hold level. Right now, it's hitting resistance from over here. You've got resistance from June and July. And it's going to be all about breaking 80. If it can get above 80, there's a gap back here in June between low of day on this candle and high of day on the 18th of June. And so you could see a run up here to test the dollar resistance zone and the bottom of this gap. That's the next target, this gap here. If the 100-day simple moving average turns into support and it breaks above 80. Keep in mind, it's a multi-day run and you had a big volume spike today. This is looking like what we call a climax spike. Look what's happened on previous big volume spikes. The red candles have followed, and so and then you had building volume bars here, and then a red volume, red volume bar and red candle followed. So you could possibly see it take a breather tomorrow and test support. It's right there. It's going to be all about holding that 100-day simple moving average to push higher. If you look here on the 15-minute chart for EARS, you can see here it did cool down intraday. It formed what we call a climax spike here at 12:45. You can see where it peaked. It hit the high of day, and then that was followed by a red candle. And so this was a signal that it was cooling down. You can check out the volume bars. The largest volume bars formed of the day. The volume bars had an increasing volume pattern. Okay, notice how the volume bars are getting bigger as the share price is rising, and that leads to what we call a climax spike. Boom! The big hit to high of day, and then a pullback forming the long upper wick, followed by a red candle. Those are all signals to lock in gains if you're a day trader. Now notice when it came back, it failed to break back above that high close resistance level, and so that did signal that was a red flag. And so what it needs to do now is get above that high close from the day back at 1040. What is that? What is that? 1145. It needs to close above the closing price at 1145. And then if we look here, I'm having a hard time getting this set up. You could see it formed a what's called descending resistance here, and so it needs to break above the descending resistance line. That was signaling downside risk. It has to make a higher high to keep pushing, pushing higher. Once it stops making a higher high, that's your red flag that it's cooling down, and then it broke below that middle Bollinger Band. That signaled downside risk. Now it closed with the doji down here at the lower Bollinger Band support level at 63. It needs to hold this level. The downside risk is if that level breaks, it could come down to the 50 simple moving average and test 55. Okay, let's look here at PEIX. Okay, so PEIX had a nice move today, closed up 43%. We've got RSI now at 69, so it's going to need to be able to get above 70 there. A lot of times these penny stocks have a hard time above 70 on RSI, so keep that in mind. You've got a bullish crossover here on ADX with plus DI crossing over ADX, the black line. And so today there was a bullish close above the green line and the gold line, the 50 and 100-day simple moving averages. Right now, the 100-day simple moving average at 248 is the key level to hold. If it pulls back, you want to see that level hold. If it were to drop below, the candles could work back into the bands. You could possibly see it come all the way back down to that 50-day simple moving average to test support. It's breaking above the descending resistance line. Check this red line here. In the downtrending channel, you can see descending support. And so this has been a multi-month channel. And the close today above the red descending resistance line is signaling more upside potential. If the 100-day simple moving average holds and it breaks above high close horizontal resistance over here around 295, the next target is the 200-day simple moving average at 314. It's going to need to close above that level and turn it into support to head higher. If it fails to break that level when tested, that will signal temporary top. Okay, let's look at ASNS. Closed up 12% today. Nice move for everybody that was in this last week. We'll get to the long upper wick in a second. It did close above 50 on RSI. At 56, there's a lot of room to run until that 70 overbought level. You have Fasto down here at 45. The long upper wick on Friday's candle lowered Fasto, so there's plenty of juice in the tank here. What happened on Friday was it ran all the way up here to about 275 or so, 274, and it pulled back. Look at that long upper wick. It drove it all the way back down below that 50-day simple moving average. You can see here there was a drop-off on accumulation distribution over here. See how it fell off of a cliff? And so that was a red flag on a down day. It did bounce today, so you had an uptick on accumulation distribution. They're obviously selling some shares here. Sometimes what happens when a stock is just heating up at the bottom of the chart, because this is the middle Bollinger Band, and that did just break on Friday, they pull the share price back so people can load for the run higher. And so right now it's all about this green line right here. If they can stay above 193, that should signal it wants to head higher. Right now that's the stop loss level. If it dropped below 193, it could come back down to the middle Bollinger Band and test 174. As long as the middle Bollinger Band holds, a new uptrend could begin. But now that it's above the 50-day simple moving average, it needs to stay above for this to be a good play pushing forward. It needs to break above the high close horizontal resistance here from the last trading day in August. That's at about 229. That's the next key level, and then you have 240 above that. And those are the two levels to break above. So yeah, this is a nice move for ASNS. We're just going to see if it can turn that 190 zone into support and bust through that 230 to 240 level. So good, that volume there looked like people were, obviously with the move today, there were people that loaded on Friday. Okay, let's look at accumulation distribution here for ticker symbol TEUM. You could see here how it had a slide. It was heading higher, and then it peaked, and then it dropped down, and then now today there's an uptick. And so there's an uptick on accumulation distribution with, look at all the red candles in a row. So you have the 6 red volume bars in a row, and those are also red candles. And so at the same time, you have an uptick in accumulation distribution. And so that's bullish divergence. That's a sign that people are starting to load. You can also see that people are starting to load on the lower wick on today's candle. Look how there's a long lower wick on today's candlestick. Well, what happened is the share price came down and it hit the red line. That's the 200-day simple moving average at 253. People loaded off of that level, and it ended up closing back above the 100-day simple moving average at 263. That's the key level to hold. If it can stay above the 100-day simple moving average, the next levels to break are the EMA 4 at 272 and the 50-day simple moving average at 276. Once it gets back above 276, it could get moving again, and then it has the moving averages stacked up right here. But if it can get back above that middle Bollinger Band, that's when it could run back up to $3. It's just an interesting play because it's been down 6 days in a row, and then you have the long lower wick showing people were loading, and so this would just be a technical bounce play. If it came back up here and failed to break any of these resistance levels, it would signal a temporary top. This is a very risky trade when it's with the close below the middle Bollinger Band and candles forming below EMA 4 at 272. As long as that pink line's resistance, it will be a risk to hold overnight. Notice how it's bouncing off of this August support level. This 250 zone was huge support back in August, so it bounced right off of it. It's going to be crucial that that holds. If you look here, we'll look here up here. You can see it closed pretty flat on the day. You've got Fasto now back above 20, and then if you look here on the 15-minute chart, you can see it's been in this downtrend, and then today it closed above the 50 simple moving average, and so it needs to stay above that level to be in play for a bounce. If it drops below 264, that signal more consolidation. It needs to hold this 259 level, the middle Bollinger Band, to get a new uptrend going. If the dotted purple line and the green line hold, then we'll be looking for 271 is the next key level to break. That's where it could get interesting. If it broke above 271, it could possibly head back up to the 280s. So keep an eye on it. We'll see if it can get pushing higher. If it dropped below 264, that will be a red flag. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.